Hi there, welcome to my latest video. In this video, I talk about how to get a good price. Not the perfect price, because I see some people waiting trying to get a perfect price pretty much, and they sometimes miss out, okay? And I say how to get a good price, because it's very important to get a good price in a good company, okay? I also talk about vaccinations, why we don't need herd immunity. Also a bit of news from Gfinity, and I do cover the chart of Ilika as well. By the way, YouTube are not sending out notifications or to subscribers on YouTube, okay? If you've been getting the email from me, it's because you're on my email newsletter list. Now, on Friday, hopefully during market hours, I'm going to be sending out news on a new company I've recently invested in. I think it's going to do very well. Of course, I would do it. I'm biased. I'm invested in it. But if you want that to your inbox, you have to sign up to my newsletter. It's free, but the link is below on YouTube. So come onto YouTube. If you're watching this on social media somewhere, come onto YouTube and you'll see show more. Click below that. There's a link there. Or just ask me. If you're on Twitter, where's the link? And I'll give you a link to my newsletter and you'll get information on that company, okay, on Friday during market hours. Hopefully then I'll do a further in-depth review of the company via video on Sunday. Does that make sense? If not, just subscribe below if you haven't on the list and you get my email newsletter. Okay, let's crack on. Okay, here's the boring bit. Anything you hear or see in this video is not investment advice. It could be absolute rubbish. Please do your own research. When investing, okay, you will never get the perfect price. If you do, it's absolute 1 in a million fluke. But you can get a good price. Now, I've seen this on Twitter recently. I'm going to wait for it to drop a bit more before buying. Or if it gets to this price, I'll buy. If you like your company, don't do that, okay? You can't predict prices, okay? If you could, you'd be the richest person in the world. No one can predict where a share price goes, all right? So, let's say you want to invest in a company, but the stock is £1 and you wanted to wait for it to get to 90 pence because it's risen by a bit before you buy. There's only two things that's going to happen, in the medium term. Of course, it could stay in between that level for a while, but sooner or later, there's only two things that's going to happen, right? The share price drops to 90 pence and you buy. That's the first thing that happens. Or it rises, you never buy and you miss out. In that scenario there's a 50% chance of you being disappointed, okay? The reason you're waiting is to get a better price, yeah? But if you wait and hope, there's a good chance you get no price. So rather than penny pinch, there is a way to get a good price without missing out, okay? Scale in. I do this all the time. I've done videos on this previously. I'll try and check it out. I'll put one there if I can, how to get a good price. But scale in. Always. I always do this, okay? So you buy a portion of the amount you wanted to buy at £1. Let's say you had £1,000, you wanted total exposure to this one company is £1,000, okay? Rather than putting £1,000 in, waiting for 90 pence to put £1,000 in, say put 300 quid in at £1. If the share price drops to 90 pence, you buy more, another 300 quid, say, or 333. If the share price drops again to 80 pence, you buy, more, but don't overexpose yourself. So if you scale in, you won't be disappointed whichever way the price goes. For example, if you bought that first tranche at £1, but it went up, it doesn't matter because you're making money, So as I say, if the price goes up, you're making money. If the price drops, you can get a better price because you're scaling in. You want that. You plan for that. It's part of the plan. But the price going up as well, it's not a big deal, you're making money. But this is an example. I've got a spreadsheet there. I did share this a while back. So it's an example of what happens if you scale in. So I set up the spreadsheet. I'm a spreadsheet maniac. So you put your portfolio value in here, okay, and stop the overexposing. And so let's say you've got 10 grand, nice round figure, for example. And then it says you could never do more than 10% exposure, total exposure in one company, all right? So straight away, maximum allocation to the stock, £1,000. Okay, that's the maximum. And then you want to scale in 3 tranches. It's different versions of this. But this is averaging down a formula for 3 trades investing at 10% drops. Okay, there's the 10% drops there. So all you do is fill this in and it fills the rest in for you. You put the price originally there. And so the first tranche, £1, 333 pence. Okay, drops 10%. Another £333, 33 pence. Okay, drops again. That's actually 10% again. So you get 330. You put all together £1,000. Okay, these are the shares you buy. Of course, you buy more shares because it's getting cheaper. Total amount of shares there. This is the total amount you spend. Okay, this is the average price you pay. So of course, first one is £1. Second time you buy is halfway between that, 95 pence. The third time you buy, the average price you pay is 90 pence. So that's the original one. If you were holding out for, say, 90 pence, and it didn't go down to that originally, there you go. But if it'd gone up, you'd done well. But initially, you're still going to get 90 pence. Now, if you'd be down 10% if you've averaged down, okay? Like this. If you had bought at £1 and didn't average down, you'd be 19% down. Okay? That's a big difference. So you need to make it up, back to that to get 10 pence up to get to break even. Here, you'd be more because you haven't averaged down pretty much, So I hope that sort of makes sense, averaging down. But again, there are two caveats, okay? Don't overexpose yourself when you're averaging down. Because let's be honest, if you're going to pay £1, why wouldn't you, if nothing changes, the story's the same, why wouldn't you be happy paying 90 pence or 80 pence? It's getting cheaper. The stock is getting cheaper. Often it's good to focus on the market cap rather than the price. And that way the market cap is getting cheaper. People get a bit worried and scared when it comes to the share price moving around, okay? Don't buy the spike. There's two caveats here. Don't buy the spike and don't overexpose. What do I mean by that, don't buy the spike? This is Ilika. Okay, now their results are out tomorrow as I speak. It's Wednesday the 13th. Happy birthday, Mum. She doesn't watch. But their interim results for 6 months ended the 31st of October is released on the 14th, which is tomorrow, maybe today, depends where you're watching. This is what I mean by the spike. Avoid, this is called an RSI. Again, I've done lots of videos on charting. I'll try and put some links up here if you can. But when it goes about 70 on an RSI, it's a relative strength index. It's a momentum indicator. It's very good when it gets to that. It's going to move. But once it gets above this 70, 80 level, you talk about spikes here. So if you bought anywhere here, and you're worrying, this is what spikes. Big movements in a day where the candle, the wick are huge, right? These are very volatile, spikes up, spike down. Look at that. You went to what? £2.80. Finished the day at what? £2.50. And then it's come down again. This here now, it's calming down. We're back into this zone of 60, 50 on the RSI. That's not too bad. But again, we have results out tomorrow. So I wouldn't go mad. And there's been a trading update. If you go back to November the 11th, their RNS, it tell you pretty much what they're going to be earning. It's not a lot of money. There's 1.3 million in cash, a loss of 1 million. But they've got about 13 million in cash, and it's a very hot sector. Like Paddy texting early on, he said, Ilika's doing my head in. He calls it IKEA. He says, too volatile. What's going on there? So don't worry. We've got a decent price. They've got plenty of cash. This is a very hot sector. Battery technology, EV, is probably one of the biggest trends you'll ever see, ever, since the internet.com revolution bubble. This is a massive revolution. So get a decent company at a decent price and hold on for a while. And again, scale in. Right now, if you're going to think of buying right here, don't think, it's going to go to 150. You don't know that. They could release their interim to go nuts again. A big buy coming. You don't know. So take a little bit now, maybe. If you've done your own research, it's not me giving investment advice. I'm biased. I own this, so I'm just saying. In any stock, if you've missed out and you want to get in, you like the company, and you think there's got a good future ahead of them, which I do with EV in this company here, name another company you can get, solid-state battery technology exposure to, for around about 200 million market cap. You can't. Like I said, their rival in America is QuantumScape. They're valued at 20 billion. Okay? They got no revenue. And Ilika are going to be producing revenue before them. So I just think this is a good deal. I really do. And I'm going to be in it for long term. I may top up if it goes lower. I got in around about £1. I'm happy here. It's going to be volatile. I'm expecting to bow out a little here. It may come down to, I don't know where it's going to come down to, but if you think of initial tranches, always scale in, okay? And that way you won't be disappointed either way the price goes. Because if it goes down, you plan for that. You've got more money ready to go. If it goes up, so what? You haven't put the maximum amount in, but if it comes down again, maybe buy another bit more and so expose yourself that way. So always scale in. Bit of news on Gfinity. They're building a good team here, aren't they? What's the price here? 4.3 pence. 34 million market cap, that all is. It's a profitable esports company. And again, another very hot sector. I go for hot sectors. They've got Catherine Bygrave, head of publisher and developer relations. Catherine joins from Activision. If you don't know who Activision are, they're probably one of the biggest games publishers in the world. I'm a huge game, I'm not a gamer, but I know of it. Activision Blizzard, huge, massive. They employ about 10,000 people. So, really impressive. So, 2017, Catherine was appointed manager of global digital commerce for Activision with responsibility for the global PC digital business. That's a big role there. And now Catherine at GFIN has been deepening existing relationships with a number of most successful publishers, including Microsoft, Activation Blizzard, EA Sports. She's obviously got relationships with you guys, and establishing partnerships with exciting, fast-growing publishers and developers. So they're going somewhere. This is these people are people of quality that John Clark is bringing on board. The last one, of course, was a non-exec director, Len Rinaldi. 12 years with Apple, general manager for Apple Western Europe, all partner relations he was responsible for, 20 billion portfolio under management, Apple's CFO for Europe, Middle East, India, Africa for 5 years, where the revenue growth there in that division went from 7 billion to 40 billion. Quality signings. It's a quality company. I like John, and I trust he's doing well. I like there's a formal sale process going on, but even if anything comes of that, we've got ourselves a 35 million market cap esports company that's profitable with a very good team, and building on that team, every month by the looks of it. So I'm happy here, happy to hold. Yeah, esports very hot. Okay, we don't need herd immunity to reopen the economy. I mean, all of people say we're never going to get herd immunity because no one trusts the vaccine or it hasn't been tested enough and all that stuff. But this is a chart. This is the most important metric of all for the economy. The reason why the economy is locked down is because our NHS is being crippled by overwhelming admissions, generally by people elderly with underlying health conditions as well. But this is patients admitted to hospital with COVID-19 up to the 4th of Jan. The figures are delayed a little bit, but there are 3,896 people on the 4th of Jan admitted with COVID across NHS. This is the UK, I think. Yeah, Wales as well. That's a lot. Look at this. This is back in April, the first wave. And they're saying now that they're having extreme problems. That's why we're locked down, to stop any more transmission, to stop. I mean, young people, one third of people are passing this on without even knowing about it. So the people that are passing, and what I don't understand is those people passing it on, it's not about you, okay? It's about you killing your grandmother or someone else's grandmother, grandfather, and them being in hospital. Hospitals are full of people over 80, okay? Now, we're never going to get our economy back open unless we can free up our hospitals, because you can't go to the hospital if you have an accident now because they haven't got a bed for you. They haven't got room for you. If you've got cancer treatment, you can't get into hospital. They haven't got a bed for you. That's critical. We can't paralyse NHS. So we've got to open it back up. So hospital admissions is the most important figure to look at in regards to opening the economy back up, okay? Look at the figures here. 3,896 on the 4th, right? Hospital admissions, 85 and over. There's 240 per 100,000 over 85 and over. 75 and over, over 100. The rest, look, 65 down. And I put this in percentages, you can see it. What do you do? This is the age groups. 80% of people go into hospital admissions. This is week ending the 3rd of Jan. Were above 75. So that's why they're vaccinating these people first, okay? It makes a lot of sense. If these people are not taking up hospital beds, our NHS, the weight will be lifted. I'll show you, look. So let's look at this, right? So 80% of these people are over 75, okay? 80% of that total figure there is 3,076. So of the 3,845, 3,000 of them are over 75, okay? And Boris Johnson said recently, 40% of 80-year-olds in this country have already been vaccinated. 40% already, half of those. So that was on Monday. We're now on, Thursday, pretty much, Wednesday, Thursday. And he was going on historical figures, of course. So let's say we get to 50%, okay, of those people. So 80% of 376, 50% of that is 1,538, okay? That brings that down to that. So half of those people, if half of those people are vaccinated and don't get into hospital, it brings it down to this level here. And like I said, that's completely doable for the NHS. They can cope with that. So that's when I think it's going to happen. If you look at the peak here, it takes about a month, even this peak, about a month to happen. And what we have in our favour is vaccinations, and the lockdown is getting stricter, and we have to a bit more fear. So I'm saying vaccinating over 50% over 75-year-olds. I'll say that again, so it's not very clear. Vaccinated 50% over 75-year-olds is significant. I don't know why I put over there twice, but just to stress the point, I didn't make a mistake. So that's significant. I think if we get to that figure, we'll start to see this coming down. We'll also start to see it coming down from the lockdown. Of course, it's more contagious, this variant, as everyone's saying, this new variant. But I think by the end of this month, it takes 2 weeks for the vaccinations to kick in. This big group of people, who pretty much will be vaccinated within a month, they're saying they get top 4 groups done by mid-Feb. But don't even need that to ease the burden on the NHS. It's this big group of patients, this here, 75 plus. They're the ones that are a burden, obviously, or I don't say a burden, I don't mean in a nasty way, because it just that's the case. If you're old, you get affected by COVID, massively. So once they can vaccinate these people, 50% of these people, it will ease the burden on the NHS, and we can start going back to normal, I think. Just my opinion. Thanks for watching. I'll remind you as always, listen, join my email newsletter. The link is below this video, and show more under the video. You'll see that on YouTube. You'll go on YouTube to see that. Click that, fill in your first name, email address, and you'll get my newsletter straight to your inbox on Friday, hopefully, and during market hours of this new company I've invested in. Okay, and I'll cover it in more detail on YouTube on Sunday via video. All right, thanks so much for watching. If you want to watch another video or subscribe to me on YouTube, you can. Click my face, and there's some videos there on the side. Thanks very much.